What is happening, you beautiful bastards?
Go to my basement and try to churn out $100 bills, I'm going to get arrested.
You can do all sorts of stuff with it.
Buying nipple rings or something like.
Yeah, you might as well use it.
What is happening, you beautiful bastards? Welcome back to another week. This week, we have our guest is Jimmy Song. Jimmy knows everything about Bitcoin.
That's right. He's actually
Bitcoin thingies.
He's actually a Bitcoin developer. I don't really know too much about what that means. Even after talking to Jimmy, there's still some areas that I walked away with some questions and new answers, but really new questions as well.
Yeah, this one might be a little technical for a couple of you.
Yeah, I would say he definitely knows what he's talking about, but this is some information heavy episode right here.
Yeah, I mean, when you get to people who are usually pretty good with all the computer stuff, usually there's a social disconnect.
Yeah, and he's quite a character, borderline Bitcoin eccentric, I'd say. But I like talking to him.
Yeah, it was a good conversation. I enjoyed it. But yeah, you'll find out.
So let's talk to him.
Welcome to the show, Jimmy. Thanks for coming on.
Well, thanks for having me. It's a pleasure.
Yeah, so I'm actually very excited to talk about this topic with you, is Bitcoin, because as I had mentioned off the air, I don't know nearly enough about it. Yeah, you know the saying, I know enough to be dangerous. That's about it. So I guess generally speaking, how do you feel about Bitcoin?
How do I feel about it? I feel like it's an enormous leap forward for mankind, and that it will change all sorts of things. But we can get to that. Maybe you might want to know about what Bitcoin is first. And
I just wanted to see if you had a positive outlook. Yeah.
Oh, extremely positive. I think it's one of the best things for humanity to come around in a long time.
That's pretty interesting. So I guess to start with, so people understand what we're talking about here, what is Bitcoin?
Well, Bitcoin is the easiest way to describe it is as digital gold. So you're very familiar with gold. Most people, want it if they don't have it. And, it's used in a lot of jewelry and so on. But the key property of gold is that you don't need anyone's permission to go dig it out from the ground. If you own some property, no one's going to stop me, for example, from going to the backyard and using a shovel to dig up and see if I can find some gold. I'm not likely to find any because I don't live above a gold mine. So it's not probably going to be successful. But if I try to do the same thing with the US dollar, say I try to go to my basement and try to churn out $100 bills, I'm going to get arrested because it is centrally controlled. So that's the big difference between something like gold, which is what I would call a decentralized money, meaning that you don't need anyone's permission, versus centralized money, which has all sorts of permission around it. It's only the Treasury that can print the $100 bills. It's only the Federal Reserve that and other banks that get to expand the monetary supply and so on. So it's a very different type of asset. The digital part is what makes it very convenient. We don't really go around and trade for gold anymore, although we used to, say like 500 years ago, actually give a piece of gold for something, usually in the form of a coin. We don't do that anymore because, the world is digital. You don't want to actually physically hand over, even cash or gold or anything like that. Most of our transactions are done online or with credit cards or some form of digital transaction. And the reason is it's very convenient. You don't need to make any change. And it's just sort of like a ledger entry somewhere. And that makes it extremely convenient. So the problem, though, with a lot of digital stuff is, especially with respect to the dollar, because it's centrally controlled, you have this ability of the central bank and many other banks as well to expand the money supply. So the dollar doesn't hold its value that well. And relatively speaking, the dollar holds its value pretty well versus other currencies. But compared to something like stock or real estate, it doesn't hold value well at all. Other currencies tend to go into stuff like hyperinflation fairly quickly because of central bank money printing. They expand the monetary supply, and soon, next thing you know, your currency is worthless. And this is exactly what happened to the people of Venezuela. It's what happened to the people of Zimbabwe. It's currently starting to happen in people of Lebanon, Turkey, and Nigeria, and many other places. You have convenience, but not the store of value aspect, or the ability to store value over time with the US dollar. And with gold, you have the store of value aspect because it is very scarce, but it doesn't have this convenience of digital transactions. And with Bitcoin, you get the best of both worlds. It is digital gold. It has all of the convenience of digital sending and receiving. I can literally send Bitcoin to somebody in China in about 10 minutes or even faster. But it also has the decentralized nature of gold. It has absolute scarcity. There will never, ever be more than 21 million Bitcoins. And for that reason, it is what we would call sort of like an ideal money. It doesn't have a physical location, so it's very difficult to confiscate. And it is locked to what we call in cryptography a private key, which is just really a very large number that no one can really guess because it's such a large number. And that's what we use to actually secure the Bitcoin that you might have. It's just much better money than the current forms of money that are out there.
What is the mining process that you always hear of? Like, what do people have to go through to actually mine Bitcoin?
Yeah, so Bitcoin mining is called mining for a very good reason. It's very similar to gold mining. So the way that gold mining works is that you go to a piece of land and you start digging, and you have to process a lot of dirt and rock before you actually find gold. The typical process involves something like processing 40 tons of dirt and rock to find 1 ounce of gold. That's usually the ratio that gold miners go through. Bitcoin mining is very similar in the sense that you're searching for something, and it's not necessarily an ounce of gold. It's not an ounce of gold. It's the digital equivalent, and it's something called proof of work. And it is extremely rare. So much like gold mining, where you have to process 40 tons of dirt and rock, you have to process many, many, many numbers before you find that proof of work. Typically, it's something like 1 in somewhere in the quintillion or sextillion range. It's an enormous amount of numbers that you have to process before you find that one. But the network manages to process that many about every 10 minutes, and you find a new proof of work, which gives you the right to print some tokens. Of course, there will never, ever be more than 21 million, but only about 18.8 million of it is in existence. And every 10 minutes, 6.25 new Bitcoins come into existence. That will have in 2024 or so, when it will go from 6.25 to 3.125. And then 4 years after that, it'll be half of that. But that's how it all comes in. At the very beginning, it was 50 Bitcoins per block. And then the 4 years after that, it was 25. And then the 4 years after that, it was 12 and a half. And it stays like that for 210,000 blocks, which was chosen because 2.1 million minutes, which is how long 210,000 blocks would take, 10 minutes per block, is almost exactly, but not quite, 4 years. So it's like 3.96 years or something like that. So based on that, if you do 50 times 210,000, that's exactly 10.5 million, which is half of the entire supply was mined in the first 4 years. Then it was 25 Bitcoins for the next 210,000 blocks. That ends up being 10.25 million. 5.25 million, or halfway from 10.5 to 21 million. So every 4 years, we're getting halfway closer to 21 million, and we never quite reached 21 million. I think we end up like 20.999 million. And there aren't enough decimal places, although, Bitcoin is divisible down to 1/100 millionth of a Bitcoin, which is called the Satoshi. But there aren't enough decimal places that it'll just be a zero reward after somewhere around 2120 or so.
Yeah, I was going to say there's going to be a time when the cost of mining Bitcoin is maybe similar to what the actual cost of owning a Bitcoin is going to be.
Yeah, it was for a while, and during bear markets gets fairly close. Although miners tend to be very good at making everything more efficient and so on. But that is sort of like the economics of it. Is like in gold mining, it costs very close to, but not quite. The price of 1 ounce of gold to mine 1 ounce of gold, but that margin is the profit for the miner, and this is the reason why not everyone is in gold mining, because you need to have expertise and the profit margins are thin, and this is why not everyone is in Bitcoin mining, because the profit margins are thin unless you know exactly what you're doing, and you can optimize and have access to energy and equipment that other people don't have, and so on.
Yeah, it's been under fire somewhat lately about the whole energy usage that Bitcoin, it consumes.
Yeah, and that's based on a flawed understanding of how energy actually works. A lot of people tend to think, okay, well, Bitcoin uses this much energy. It's as much as the country of Denmark or something like that. And they go, oh, how could, this must be terrible. Actually, you have no idea how energy works if that's how you think of it, because the energy used in Denmark is very different than the energy that's being used by Bitcoin miners. The energy that you use in your house is very different than the energy used by a car manufacturing plant or something like that. Energy is not fungible. You can't just say, okay, well, it uses this much energy, it uses this much energy, therefore they're exactly the equivalent. Energy is actually not very portable. In fact, the only portable sources of energy really are fossil fuels for the large part. You can transport coal and oil fairly easily, and even natural gas to some degree, but most other things are not portable. If you have a wind turbine or a solar panel, it tends to be stuck in the place that it is, and it can really only serve a small geographic area because the cost of transmission tends to be fairly high after that point. So, but the thing about the energy market that a lot of people don't understand is that it is optimized for availability. And what I mean by that is that it's a lot like a rental car agency. So if you, as a customer, went to the rental car agency and asked for a car and they didn't have a car for you, that would be a terrible user experience. And energy is kind of like that. If you turned on your lights and it didn't come on, it would be a terrible experience. And in fact, it might be deadly in the case of hospitals and so on that are running life support equipment. So what energy companies do is they always produce for peak demand. And peak demand might be, for example, here in Austin in the middle of the summer, like July 5th or something like that, when it gets very, very hot and everyone has their AC on full blast. But that's not going to be the case every day of the year. So a large part of the energy production actually gets wasted because people aren't using it. Kind of like rental cars sit in lots and they aren't being used every single time because the rental car agencies usually try to optimize for availability as well. So what that means is that something like a third of all global energy produced is just plain wasted. So when you have something like 160,000 kilo or megawatt hours are produced around the world, and a third of that gets wasted, which is a significant amount because they are all producing for availability, and if it doesn't get used, it just sort of gets wasted. And this is where Bitcoin mining is extremely unique in the sense that it can just take energy whenever and wherever because of the ability of these machines to be moved around fairly easily. And that means that you can go and use what we call stranded energy from the grid. And stranded energy is energy that's available, but no one can really use because it's either too far from a population center that can use it, and otherwise has to go wasted. So this happens a lot with green energy, actually. So for example, wind turbines generate a ton of energy when it's windy, but almost none when it doesn't. And when it's generating a ton of energy, that's not necessarily the time that people want to consume that energy. So what do you do with it? Well, battery technology isn't nearly good enough to actually store it up and give it out when it's actually needed. If only that were the case, that would make the grid a lot better. But unfortunately, that's not the case. Battery technology is nowhere near that level of sophistication or capacity. So what ends up happening is that energy just kind of gets wasted, right? Because there aren't enough consumers. Similar with solar. During the day, it can generate a lot of power, but not necessarily during the evening. And when it is very hot during the day and when it's generating energy, might not be the time that people are wanting to use that energy. Same with hydroelectric dams, right? Like they generate tons of energy, but they tend to be very far from population centers for a very good reason. If you live near a dam and it breaks, you're going to get flooded. So people don't want to live there. So you have all of this stranded energy, and what a lot of Bitcoin miners have been doing is taking all of this energy that's stranded and buying it on the cheap, because these energy companies want to get rid of it. They either get zero for it or a small amount, because of course they're always generating for peak demand. And what ends up happening is that these miners come in and can pay them some amount of money for it. And usually these are contracts that last months, and the power companies usually have some clause in there. During peak hours or when we need it, you're not going to get any. And for that, you're going to get a much lower rate than you would normally get. So just to give you an idea, if you're a normal consumer of energy in a residential area, you're paying somewhere around 15 cents per kilowatt hour. That tends to be the going rate. And depending on the country, it can be higher or lower. But if you are a miner, typically they aren't profitable unless they're paying like 2 or 3 cents per kilowatt hour. And those are the contracts that they tend to negotiate in places that have such stranded energy that it is extremely cheap for that reason. So like all of this talk of, Bitcoin is using all this energy, the energy that it's using is energy that would otherwise be wasted. So
it's not that it's not using a lot of energy, because it is. It's just you're not going in peak hours. I understand what you're saying.
Yeah, and there's other stuff too, right? Like so it turns out that when you're drilling for oil, for example, oil never just comes by itself. It's almost always there along with natural gas. But the natural gas, so you have to kind of get out the natural gas before you can actually pipe the oil out. But like natural gas is actually useful, right? And if there are large natural gas deposits, what they'll do is build a pipeline from that area so that, or capture it and transport it or something like that. But it's not. But capturing natural gas is not easy. First of all, it's a gas, so like you have to have all sorts of sophisticated equipment to capture it. And it's generally not economical to do it in the middle of nowhere, because most oil wells are in the middle of nowhere, and to build a pipeline from that place to wherever you can process the natural gas into a pure form or whatever, it's going to be going over a lot of different land, and you're going to have to get like rights to it and stuff like that, which is almost never economical. So what oil drillers usually do is they just burn it off, because if you let natural gas go into the atmosphere, that's methane. That's a much stronger greenhouse gas than carbon dioxide. But if you burn it, then it turns into carbon dioxide. So it's at least they can
they're not getting fined
at least do
much.
that. Yeah. So but what you can do is you can bring Bitcoin miners to the area, and as long as it's being burned, you're generating electricity. So they use that natural gas to power Bitcoin miners, and that gives the oil driller some additional revenue. And that in turn means that the oil well can be dug more profitably for everybody. These are, and you're polluting the environment less and everything else. It ends up being much, much better for everyone. And this reputation that Bitcoin has is based on a completely flawed understanding of energy and how everything works.
I still think that basically with these things, you're going to be producing a lot of heat when you're running computers like that.
Mm-hmm.
At that time, there's so many things we could find to use the heat from computers. You can do all sorts of stuff with it. But I mean, it still uses a shit ton of energy. But I understand what you're saying, where they're trying to find it to where it's still a more efficient way.
Yeah, the moralizing about like Bitcoin's energy use really rankles me, because you know what uses way more energy than
so many
Bitcoin?
things.
Yeah, dryers. Okay, like go start drying your clothes outside before you come moralizing at me about Bitcoin, right? Like it's and that's all using like residential rates, and contributes to peak demand that. In almost every city. It's like, that's way more stressful to the grid than Bitcoin ever will be. And yet that's, like people want to moralize about it. The other thing is that Bitcoin is, it introduces like stability to the grid in ways that people hadn't thought of. You mentioned like the heat that the Bitcoin is emanating. There are people that are using it as heaters, but there's also people that use it to brew beer, right? Because you generate a lot of heat, and to process the hops and things like that, you need these giant vats that are heated. And I believe somebody has actually brewed beer using Bitcoin miners as the actual heat source.
I mean, it's not an insanely high temperature, but it's going to be consistent.
Yeah, and it turns out it can be used for all sorts of purposes.
Now, the energy use and the actual process of getting the energy to have your computers run and mine this Bitcoin is far more, I guess, difficult sounding than I actually anticipated. But I am curious, why do they have to use so many GPUs instead of CPUs? So the graphics cards instead of other processing power. What's going on there?
That's more altcoins. So at the very beginning, it used to be CPUs, but you have to understand that a CPU is a very general computing device, right? Like it can do all sorts of things. The CPU on your computer or on your phone can do all kinds of tasks. And that versatility means that it's not nearly as fast for the particular thing that Bitcoin needs, which is calculating what we in Bitcoin call a hash 256 of a particular packet of data. But that particular thing is, it can do it, but it's not very fast. But at the beginning, that's what people used. And then people realized, like, okay, well, GPUs are more are a little more specific. They aren't as general as a CPU, but it can massively parallelize stuff, because that's what you need to do in graphics typically, is that you need to compute what each pixel's color is supposed to be. And it uses that massive parallel power in order to do it. And that's why you need it if you're a gamer or something like that. So it has lots and lots of different very simple but not as versatile cores that you can use. The actual process of hashing is relatively simple. So you can massively parallelize, and of course GPUs end up being much faster for that reason. It can do like 5,000 tasks at the same time, instead of a CPU. If you have like 4 cores, it'll only do 4 tasks at a time, and so on. What ends up happening, though, is that even that's not that efficient. There's something called Fpgas that can sort of hardwire a lot of that stuff, and it makes it even faster. And then you can get down to sort of like the silicon chip level, and you can make specific hardware that only computes this thing. So as you go from sort of a more general computing device to a very specific device, you get a lot of efficiency gain and a lot faster computation. The current generation of ASICs, these are application-specific integrated circuits that do the actual Bitcoin mining. They are extremely efficient, but that's all they can do. You ask these circuits to do anything else, it just simply cannot. Whereas your computer or the CPU on your cell phone can do all sorts of different things. This thing is very specific, but it's very good at doing that very thing. So just to give you an idea, like CPUs can do somewhere in the order of mega hashes per second. This is every second it can do 1 million hashes, and hashes are the equivalent of digital dirt, right? Like that you have to process as a miner. Graphics card, like a very high-end one, can do on the order of giga hashes per second. So it's doing 1 billion of these, processing 1 billion numbers every second. A modern ASIC currently, I guess like an Antminer S19, something like that, can do 17 terahashes per second. So it's doing 17 trillion, it's processing that many numbers. So you get like some significant boost by making it as specific as possible. And that's what Bitcoin uses. A lot of altcoins try to, for some very bad reasons, not very well understanding the economics of it, for some very stupid reasons, honestly. They have made the hashing algorithms on their platform what you would call ASIC resistant. So it's difficult to build application-specific integrated circuits for those algorithms. Although it is possible, but what they end up doing is switching their algorithm every once in a while so that you brick all of the current ASICs that are out there, so nobody actually manufactures them. Instead, you more or less have to use GPUs, which is what a lot of gamers complain about, because when you get alt season, all the graphics cards end up going to these altcoin miners, and they can't even buy one even at like a large premium. And that does happen every few years. So yeah, that's I think what you're talking about.
Yeah, that's kind of the what I was getting at there, is because what I see in the news is that there's always a shortage of GPUs whenever everybody wants them, and I just didn't understand what the whole reason was. But it actually sounds like Bitcoin has gotten away from that as a process.
Yeah, no, I mean you can't be profitable mining with a GPU. If you did, you would burn out your GPU, and the electricity would cost way more. Even if you get the electricity for free and you ran your GPU, the wear and tear on your GPU probably costs more than any Bitcoin that you're going to earn. That's how terrible the economics is, because the ASICs are just so much more efficient, and it's a single task device, and it just does that single task extremely, extremely well. Whereas a GPU is, again, a little bit more general than an ASIC, and it is useful for lots of other things, which is why it's not as good at this one particular task.
So now that we kind of got a basic idea of how Bitcoin works and how we get it, so if it's decentralized, where does it even come from?
Yeah, so the way that Bitcoin works is that there's a giant ledger of every transaction that's ever happened on Bitcoin, and this is called the blockchain. Now, that word is a little bit tricky because a lot of people have co-opted it to mean something completely different than what Bitcoin actually does with it, which is essentially store every single transaction that's ever happened on Bitcoin since the beginning, which was January of 2009.
Yeah.
So it's got something like 12 and a half years of the history of every Bitcoin transaction that's ever been done on there. It's currently around 300 gigabytes, which sounds like a lot, but relatively speaking, it's not that much. But that's the ledger of every transaction. So if you think about what a ledger is, if you go to your bank and you deposit $500, what they don't do is put your $500 in a drawer marked with your name and put it in there. That's not what they do. They put it in the vault and then credit you $500 to your account. And when you send a check from one person, to another person, they debit your account and they credit the other person's account, assuming they're at the same bank. That's basically how Bitcoin works. It's a giant ledger, and it has, debits and credits and everything else. The thing that makes it decentralized is that every single person runs their own node. They check this giant ledger so that they're constantly auditing the ledger, basically, and making sure that no one is doing transactions that are essentially illegal. So if you send more money than you put in, right? Like if you're overdrawing from your account, then that would be an illegal transaction and no one would accept it. And that would be, that's something that everyone's checking for. It's also checking that the 21 million limit and the number of Bitcoins that are coming online is legit and everything else. It's a lot of other rules that it enforces, but essentially everyone that's running this software is constantly checking. There is no trust involved. There is verification, and everything is verified as long as you're running that software. So what that means is that there are literally tens of thousands of copies of this 300 gigabyte ledger that people are constantly checking. And every 10 minutes, there's sort of like a new page in the ledger. That's what's secured by the proof of work and everything else. But that new page is checked for consistency with the rest of the ledger, that it's not doing anything illegal and so on. And it gets accepted by each node that is validating absolutely everything. So it exists in a decentralized way because there's this ledger that everyone has a copy of that everyone is checking. So instead of your bank deciding, okay, well, we don't like this person, we think that person is a drug dealer, so we're going to seize all of their money because the DEA says so, there's just a ledger, and there are transactions that are valid and there are transactions that are invalid. As long as it's a valid transaction, it goes through. And assuming you can get a miner to include it in their block, or a new page on the ledger by paying them enough in fees and so on. But that's how it gets into the ledger, and that's how it's decentralized. There's no central controller at all, and there's no one able to like censor your transactions or confiscate your money or any of these evil things that centralized systems have.
So does that mean that because of the way it operates, that's much harder to counterfeit?
Yeah, well, it's impossible to counterfeit. If you, as long as you're running your own node and somebody, sends you counterfeit Bitcoin, you would know immediately that's not legit, because first of all, it wouldn't show up in the ledger, right? If it's an illegal transaction, it wouldn't show up. Once it shows up in the ledger, then it's legit because your own the software that you're running has validated it, and you have the entire ledger, so you know that it's either legit or not legit. So there are all sorts of block explorers that you can go online with, but essentially you're trusting somebody else, but at least they're a third party. But yeah, it's near impossible. In fact, I would say it is impossible to counterfeit for that reason, because everyone is checking everything. And if you are running a full node, you can check for yourself and you don't have to trust anybody at all.
Right. So, Andy, what were you going to ask?
You can keep going. I was going to get into China in a little bit.
One thing I wanted to ask was about, let's talk about the security a little bit, because that has kind of come into question a little bit recently with some of the things that were going on a larger scale with, the ransoms and stuff, when we had those organizations that held the, Andy, what was that as energy
the
grid?
Oil company?
Yeah.
We had an energy grid. You had an oil company.
So it was a couple of things, and they ended up saying they wanted to get paid their ransom in Bitcoin. And we found out, I think it was a couple weeks later, that the government was somehow able to take it back, which was not supposed to be able to do. Is that right?
Well, I don't know the details of that, but here, the big thing about Bitcoin is that it is the money of enemies. Right? Like, and
Yeah.
this is like, you don't have to agree at all in order to use Bitcoin. And this, its digital nature and its decentralization does make it sort of like convenient for ransomware hackers to use it and so on. But Bitcoin itself isn't under threat by any of those things. It's really individuals that have lack security on their computers or something like that, and that's certainly what happened to those two. But as far as like the government's using it, usually that happens when it goes to some central single point of failure. So if those Bitcoins end up on Binance or Coinbase or something like that, those are exchanges and they are regulated. So a regulator can go in and say, hey, freeze this account, and they have to comply, and they often do. And that's happened more than once, and it's for that reason why we in Bitcoin say, not your keys, not your coins. If you don't possess your private keys, that's what gives you possession of the actual Bitcoin. Then it's not your keys, and if it's not your coin. So if you're leaving it on an exchange, what you really have is a claim to some Bitcoin that they hold for you. But that can be taken away for any number of reasons, including hacks and government regulation and many other things. So, I'm guessing that's what happened with that particular case. You can't once it goes to another address, you can't really stop it. It's like it's a bearer instrument. It's kind of like losing 400-ounce gold bar from your safe or something like that. And once it's gone, it's gone. But
Right.
that's the price of decentralization, and it's actually one of the features. It's not a bug. It's a very good thing that you can possess it instead of having to trust a third party in some way, shape, or form.
So, but I mean, in that sense, a lot of your lay people who want to actually purchase or own Bitcoin, it's going to be a lot harder. Granted, they're not doing anything illegal in theory, so they shouldn't have to worry about it too much.
Yeah, I mean, the thing that you have to worry about is stuff like hacks. So
Yeah.
there were a lot of legit people that had Bitcoin on Mt. Gox when it blew up in 2014. But I mean, they got like, I think it's still in litigation, so they're getting at best like a small fraction of the money that they had on there. So it's not just, okay, you have nothing to worry about if you're not doing anything illegal. It's that they might be incompetent or malicious or both, in which case you might lose your Bitcoin if it's with somebody else. The only sure way to make sure that you are keeping your Bitcoin safe is to possess it yourself and have good security practices. And honestly, this is not something that a lot of people are used to. We're used to outsourcing security for all sorts of things,
Right.
including money, especially because that's what a bank began as. It was a place to warehouse your money, right? Like that people didn't like having 400-ounce gold bars in their house, and that it was for that reason banks started. But I don't think that's a bad thing. Our tendency is to shirk responsibility and not be in possession of our own stuff. But this is the price of self-sovereignty, is that you have to be responsible for your own stuff. You can't, there is no safety net for you if you're possessing your own stuff, but you also have freedom, and you don't have this external risk of other people being able to take away your money because they don't like you, which has happened to way too many people. And like this, I wrote a book, the Little Bitcoin book, and one of my co-authors is Alex Gladstein. He's the chief strategy officer at the Human Rights Foundation, and this is one of the things that he points out all the time, is that the first thing that happens to human rights organizations in almost any country, the government doesn't like them, and most of them, their governments do not like them, is they cut off the financial access. Any bank accounts you have, they'll just take it. There are human rights groups everywhere that are like having to figure out how to manage themselves without a bank account, because that's where you kind of need it. And Bitcoin has been sort of like a big lifeline for them because they can be their own bank. They don't have to rely on this financial system of their particular country, which is often really corrupt and used for to enforce sort of like authoritarianism and dictatorships and so on. So it ends up being a giant tool of freedom to be able to have sort of self-sovereignty over your own money, and it's a big thing to be able to do that.
Yeah, that's. I'd imagine that's why we're seeing places like, I think it was Venezuela that wants to adopt it as their national currency, and
yeah, it's El Salvador, but yeah.
Oh, El Salvador, yep. So it actually makes sense now, knowing how China's treating the situation, because they don't want anybody using Bitcoin or anything except their new version of a crypto, which I guess is just a digital currency, not even crypto.
Yeah, it's a central bank-backed digital currency, what we call a CBDC, and those things are pretty scary because, in a sense, if you take just the blockchain part and put it under central control, it's really just a database of every transaction that's ever happened, and that is an authoritarian central banker's wet dream, right? Because you have a record of absolutely what everyone is doing, and there is nothing more private than your purchases. Like how you spend your money will reveal almost everything that you might find embarrassing, or something, right? Like you're buying nipple rings or something, like they'll know, right? And if you're doing anything subversive, right, you're buying, books that they don't want you to buy, or importing things that they don't want you to import, or something like that, they'll find out about it. And that's I think the idea behind CBDCs. The big thing that the reason why I don't think CBDCs will be coming to the US is essentially, if you have a central bank digital currency, then you can just have one central bank take care of the needs of everybody. In the United States and in the Western Hemisphere, and in most countries actually, you have multiple layers of banks. So you have the central bank, which is a bank for other banks. That's literally their function. And then you have member banks. These are commercial and retail banks. The retail banks are the ones Wells Fargo, Bank of America, places like that. But there are also large commercial banks. Probably have heard of, State Street, Fidelity. A lot of them lend out not to consumers, but to like businesses in the form of like buying corporate bonds and so on. And those, they actually can expand the money supply because they can do what's called fractional reserve lending. So typically what people think of banks as doing is, okay, there's a bunch of people that deposit money and they have $1 million in savings, right? And then the bank and they pay them like 2% interest, and then they lend out the $1 million at 4%, and they pocket the difference. That's how people think banks work. That is not how banks work. What they do is they take $1 million in deposit, and then they lend out 10 million. It's like, wait, what? How can they do that? Well, they can do that because it's just a ledger entry, and they don't have to physically give them the actual cash or gold or whatever it happened to, whatever it was backed by. They lend out 10 million. So they make 4% interest on 10 million, and they pay out 2% interest on 1 million. So you can imagine why it's extremely profitable to be a bank and why there were so many, because of this ability to essentially print money for the purposes of lending, and then making significant interest. And that was how banks made money for a long time, until these days, like, interest rates are so low, and the Fed has more or less removed the reserve requirement. So in the case that I outlined to you, where you have $1 million in savings and you lend out 10 million, that's what you would say that the reserve requirement there would be 10%, because 1 million is 10% of 10 million. So they had to keep 1 million back. They've more or less gotten rid of the reserve requirement, so they can kind of print with immunity. As long as lenders are qualified, they will print money on your behalf. And that's That's how like sort of commercial and retail banking works. So, and you can kind of see this if you think about it a little bit. Right now, you can get a 30-year mortgage for about 3%, and these are conforming loans. So I think the conforming limit is like $417,000 or something like that. So let's just say, give a nice round even number, $400,000, 3%, 30 years. That's what you are able to get on the market. Think about the other side of the trade. Who the hell is lending, or who the hell is investing that, right? Because like, would you ever take the other side of the trade where it takes 30 years to get your principal back? It's 3% per year, and there's some credit risk, right, in case you don't pay back. Would you ever take that? Probably
Not me.
not.
No.
Like that,
Nope.
there's nobody that would take that. That's a terrible investment. If you're not getting at least 6-7%, you're probably doing horribly, and like 3% is not that good. So, but yet that's happening all day long, right? Like there are hundreds of thousands of people that are getting mortgages every week, every month, every year. So where's that money coming from? Well, it's being printed on your behalf. Every time you are getting loan money, it doesn't come from somebody's savings where they have to give up opportunity costs. It's created for your benefit. And it's not just mortgages, right? It's also all these like corporate bonds and things like that, where they're borrowing sometimes hundreds of millions, sometimes billions of dollars at like insanely low interest rates, because it's money printed out of thin air. Now, the thing about CBDCs, getting back to sort of my original point, the thing about CBDCs is that it kind of cuts out all of the middlemen. Now, central banks do this too, right? Like they expand the money supply, and the main customer that they are servicing is the national government. So in the United States, the Federal Reserve services the debt needs of the United States. So you might have a budget of 6 trillion, right? Like that's the current amount that's being spent, and tax revenue of like 6 trillion and 4 trillion, right? Like so, where's that extra 2 trillion come from? Well, that is the Treasury issues bonds, and these are called treasuries for the obvious reason that they're issued by the Treasury. But basically, they issue $2 trillion worth of treasury bonds. And these are considered some of the safest, but they also pay very, very little. I think the 10-year recently hit 1.5%, and people are going crazy saying, oh my gosh, it's going to get too high and so on. But that's what they do. They sell it to the public, and some foreign central banks will buy it for their reserve. But a lot of it won't get bought, especially in times like right now, where most central banks are not buying Federal Reserve treasuries. So what does the Federal Reserve do? They are called the lender of last resort for this reason. They will buy up the rest of it. So maybe you sell like $500 billion to the public and to other countries. You have $1.5 trillion left. They just buy the rest. And this is money, again, printed out of thin air. What a CBDC allows you to do is do that at every level. You cut out all of the middlemen, all of these commercial banks and retail banks, and it allows China to have more central control of everything. The nice thing about that is that everyone gets a bank account in the country, right? Like, so like problems like we have now when they're trying to send out stimulus checks of, okay, how do we send the money, kind of go away. And it's very good for central administrators because, okay, instead of having to figure out where you are and, how to send you, food stamps or money or whatever, they can just credit your account and, put whatever restrictions they want on it. So if they're giving you money for food stamps, right? Like what they can do is give you some amount in like sort of a separate food account, and that money can only be spent at a grocery store for food that's not above a certain temperature, so that that's usually how food stamps work. So but that's something that they can do, but it gives them incredible access to all sorts of surveillance. And this is the really scary thing, is that China already has something called the social credit score. And if they don't like you, they lower your social credit score. And if you have a low enough social credit score, you can't do anything. Like you can't go buy a train ticket. You can't like transport yourself. It's going to be hard for you to get food and so on. And this is how they've oppressed, for example, the Uyghur minority that's there. They put them in something that's akin to concentration camps. A lot of them are being murdered, probably. Like we don't really know. I mean,
they're just disappearing.
Yeah, they're just disappearing, and this is something that is extremely scary. But and it makes like what Nazis did with like labeling people like it supercharges that sort of thing, right? Like this is like Hitler would have loved this, Stalin would have loved this, because it gives you like such fine-tuned control of every single person, and you can monitor them in ways that were kind of unthinkable even a few years ago. So that is why China is going towards CBDCs, and as a result of that, as you alluded to, they're starting to kick out like the alternatives like Bitcoin, which allow you to do value transfer without any of that stuff. And
did they kick out mining as well?
Yeah, they did. They did.
Yep. Which majority of miners were in China.
Were in China, and a significant number of them have left. A lot of them are moving to Texas, largely because of the regulatory certainty that's available here, and the free energy markets, which allow them to negotiate for really cheap energy. So, it's like the alternatives are kind of scary, and it's going to be a big clash of different visions of the world in the near future for that reason.
Now, what would you say to people who've watched Bitcoin in the last like 3 months drop down 35,000?
Yeah, and that's a completely normal thing in Bitcoin. You learn about it fairly quickly. I've been in this space for about 10 years, and the very first bubble I experienced was when Bitcoin went from somewhere around $1 to $30 in the middle of 2011, and that was pretty crazy. People are saying, and then it crashed down from $30 right back down to $2. And people were saying, "Oh, Bitcoin's dead," right? Like I think Wired had a magazine article saying like basically predicting the end of Bitcoin after that crash, saying, "Okay, well, this was an interesting experiment, but it's obviously over." Of course, it wasn't over, and we had a similar thing happen in 2013. In April of 2013, where it went from like $10 to $260, and then back down to $50. And then later in 2013, it went from $100 to $1,100, back down to $200. And then in 2017, it went from about $1,000 to $19,000, back down to $3,000. And then this recent run went from $3,000 to $65,000, down to $27,000. So that volatility is completely a normal part of Bitcoin. And there are two things I would say about that on why Bitcoin is so volatile. Number one, risk and reward are sort of like two sides of the same coin. If you don't have much risk, you're not going to make much reward. So treasury bills are extremely safe. They probably have some systemic risk in there, but it's priced out of the market. The Federal Reserve basically de-risks a lot of different things by buying them and so on. But that has very little risk, but it also has very little return, like I think 1%, something like that. In order to have more risk, you need more volatility, and that's what Bitcoin has. It has tremendous returns, on average, something like 150 to 200% a year since its inception on a yearly basis. You're not going to get those without some volatility. What people want is something that goes up only at a very steady rate. And that's what the Fed tries to do with things, but then the slope's going to be much lower. It's not going to go up at the rate that it's going. So you kind of kill you throw out the baby with the bathwater, basically. The other reason why Bitcoin is volatile is because it doesn't have a central bank. So if you think about other currencies like the yen, the euro, and many others, they generally stay within a certain range. So the yen for the last 30 years or so has stayed roughly around the range of 100 yen to the dollar for for 30 years. The euro's been similar for like the last 15 years. It's been in the range of 1.1 dollars per euro for a very long time. And that is done for a reason. And the reason why it stays in that range is because of the central banks. Whenever the price gets too high, they'll print more of the currency. When it gets too low, they will buy back their own currency using the treasuries and the reserve in their vaults. This is why they buy treasuries. By the way, it's so that they can on the downside they can always buy back their own currency using treasuries as a way to balance it back out. Yeah. And they need to do that because we have a global economy. And if it gets too low, then your goods, your imports are too expensive. So it ends up being very difficult to participate. And if it gets too high, then your exports are too expensive, in which case your goods don't sell on the international market. So, having to like manage that, or what they would call pegging the currency to a particular range against the dollar, is an important function of every other central bank other than the United States. And this has to be done in order for imports and exports to balance, and for your local economy to be able to participate in the global market. So these central banks essentially keep it stable. There would be much more volatility if these central banks weren't intervening in the markets constantly, but that's kind of what happens. That's why the pound seems so stable to the dollar, relatively speaking. But again, Bitcoin doesn't have a central bank, and that means there's nobody sort of like buying or selling in order to keep prices more stable, respectively. But that's also the killer feature. It's what gives it sort of decentralization. There's no central bank managing any of this stuff, and this is in stark contrast to altcoins, which do change their monetary policy on a consistent basis, and do whatever they feel like with a central controller. So in a sense, all these altcoins are basically kind of like mini central banks, whereas Bitcoin really is decentralized and has this large volatility as a result.
So on the altcoins, are there any of them that you would even look into?
No.
None? Not a single
I have
one?
looked into them, and every single one has a single point of failure, an easy way for the government to come in and intervene. I mean, there was, for example, this hack of the Poly network not too long ago, and I wrote about this in this past week. And basically, a hacker was able to, and I hesitate to even call this person a hacker. There was a smart contract that was very badly written, and this person found a clause that could be used to drain it of something like $600 million worth of the network's token, right? And it was $600 million worth. And what the Poly network people did was they basically called up every exchange, called up every miner that they knew, and said, do not mine transactions from this address, because that's where we know it is, and do not service this person. So the person was kind of stuck with like $600 million worth of this currency that they couldn't spend. What they ended up doing was, communicating back with the Poly network people, and they settled for $500,000 as sort of like a bug bounty for finding this flaw in the smart contract. But what that tells you is that if the central authority of that network wants to, they can block you from doing whatever you want, right? And it's not decentralized in the least, because they're controlling things. They made it so that this person couldn't spend. And if you look at it in percentage terms, $500,000 is like less than 0.1% of the actual nominal value of that currency. So really, 99.9% of the value is dependent on the central authority giving you approval of whatever transactions you're doing. So it's not decentralized at all. And every one of these networks is like that. Ethereum has done that multiple times, right? Where they had this thing called the DAO, decentralized autonomous organization, back in 2016, where 1/6 of all Ethereum was in that contract. Somebody figured out a smart contract flaw, drained it of of most of its money. And basically Vitalik said, all right, we're going to roll that back. We're going to we're going to pretend this thing didn't happen. And, like amazingly, people were fine with it. And, like it was like the most centralized thing that you can imagine. And like all of these networks do things like that, or are capable of doing things like that because of the centralized nature of their coin. So to me, it's not any better than fiat. It doesn't give you self-sovereignty. It doesn't give you control. And it's basically setting itself up to be regulated in a heavy, heavy way, which I expect to come in the next few years.
Yeah, it seems like the government's really harping on that right now. They want to get this under control because, of course, to an established government, decentralized anything is kind of scary.
Yeah, it really is. And I mean, even Gary Gensler, who's the new SEC head, like he made it clear in his speech that, like he thinks Bitcoin is an actual innovation, that there is something there. But all of these altcoins, they're all centralized and they're probably illegal securities. And in that case, there's a lot of fines that are going to be meted out, and possibly some people going to jail, depending on the extent of the violations that they find. Because I've been saying this for a while. This, it operates. Many of these things operate like scams and are Ponzi schemes, pyramid schemes, or both. And there are going to be consequences because a lot of people are being screwed out of their money, and we'll be seeing it very soon.
Yeah, we see. I've been seeing a lot of sketchy things, especially from Andy's favorite, Dogecoin.
I think Doge I find hilarious, for one, because there's no limit, which to me makes it a bad, like.
Yeah, you might as well just invest in the U.S. dollar. It's just a bunch of IOUs like we already have.
Like, if you invest in it, good on you for trying to do anything. And unless they change the code, the problem is if you put $1 in and nothing ever happens with it, it's going to depreciate in value because every day it goes up like 1 million. Like it's some ridiculous number that it goes up. So how could it ever be worth that much money?
Yeah, you would think that the lack of scarcity there would be something that would do it. But here's the thing about Dogecoin. It's it's sort of like this very postmodern, like Nietzschean ethic that's driving
people love
price
it.
Increase there. Yeah. It's like the thing about investing right now is that it's in kind of a very weird space. It used to be all about like value, like back under the gold standard, for example, like, if you didn't pay earnings, you were worth zero, right? Like that was what stocks were. If you were investing in a stock, you expected dividends. And if you didn't get dividends, then there was no yield. So why bother, right? Like why own this thing? It slowly changed as like fiat money came along because people needed a different store of value, a place to put their money that wouldn't get, depreciated away from them or inflated away from them. And eventually it led to sort of like, stocks not paying dividends at all. And that became sort of like a quote unquote innovation, but then it makes it sort of just like a popularity contest. And people started recognizing this, and especially like in the past year and a half with the whole Wall Street bets crowd, it really has become sort of like a mob mentality thing. It's okay, we're going to make this worth more, and there's nothing that you can do to stop us because we're not going to listen to the fundamentals, and we're not going to value this thing based on anything real. We're going to value it based on what we think it should be, period. So you've had stuff like GameStop and Hertz and AMC that have pumped purely because people wanted it to pump. And Dogecoin is sort of like the epitome of that, in my opinion, because at least those have assets, right? Like they're actual like cars that Hertz bankruptcy, thing owns, and you might have access to or something like that. But with Dogecoin, it is literally nothing. Right? There's no purported usage. It is a digital token with no purported usage whatsoever. So when it gets pumped, it is purely done as sort of like a collective will to power, right? Like we're going to make this pump because we wanted to, and you can't stop us. And that's just sort of gone on and on and on. And it's for that reason, like investing is in this weird space, because like basically nothing produces yield anymore, right? Like there's no dividends on any stock. There, like bonds are like returning negative rates in Europe and are very close to zero here. Like there's nothing with yield. So everything is this like weird thing where it's not about like the actual cash flow generated by the asset at all. It is all about the popularity of the thing itself. So like, to give an analogy, like what's the difference between Amazon and Dogecoin? Well, Amazon obviously produces stuff, but from an investment perspective, neither of them pay any dividends, right? Neither of them do. Like they just sort of like exist, and it's based on how many other people buy into it that the pricing. So you're only banking on a price increase, which only depends on popularity. And how many investors are rational enough to look at possible future cash flows and things like that? Well, it turns out not as many as you would think, because you get people like in Wall Street bets that will bet the hell out of whatever without any regard to the actual fundamentals. So in a sense, like Dogecoin is a symptom of like sort of this weird sickness that fiat money induces, which is that it's not based on reality at all. It's just based on popularity or sort of like a collective will, if you will, not anything about the actual merits of the business. And that's very scary, because if it gets to that, then the money doesn't mean anything. None of these businesses mean anything. And it's all about like it's all about marketing and getting more people to buy this thing than anything else. And at that point, like, like there's no value anywhere. It's just sort of all monopoly money.
Stocks have kind of been that for a little bit. It's just people didn't know about it, right? Because a lot of it was up. Oh, they're coming out with this. All of a sudden the stocks fly up, but it's working for some people. Like AMC probably would have been gone if that didn't happen.
Right. And
like
you're keeping afloat a lot of companies that really should be dead, right? Like, yeah. And these are and the entire stock market is floating with many zombie companies that are the walking dead. Like, I mean, like IBM, for example, like I don't think they've spent too much money on dividends for a while. They used to be like they were called Big Blue because they were considered the biggest blue chip stock, right? Like if you own anything, you always owned IBM. This was back in the 80s and stuff. And it was because they were producing machines, producing computers and other things. And that was their business. Over the past 20 years, they have done something like 170 billion in stock buybacks. Their current market cap is below 170 billion. That tells you like something is seriously wrong with this company. And it turns out that they've basically sold all their manufacturing businesses. They used to have a very nice line of laptops called ThinkPads. They're now Lenovo, right? Like they sold it to a Chinese manufacturer. They don't do that anymore. They used to, build these servers and so on. They don't do that anymore. They went into these like service businesses that pay a lot of money, but for like consulting engagements and so on. And they still do that to some degree, but it's really not producing anything per se. It's just sort of kind of moving money around. And I would say that they're kind of a zombie company at this point. Another one is like General Electric, like the company that Thomas Edison founded, right? Like this is they were responsible for all sorts of manufacturing things. They're probably a zombie company as well, because they're essentially subsidized by money printing. They like IBM have a lot of ins with politicians and so on. So they get like these large loans that they can pay back very slowly and stay afloat despite probably being insolvent to some degree. And these companies employ tremendous numbers of people, many of whom are probably very talented, that are probably being extremely underutilized. Instead, they're sort of like playing out their days, waiting for like some sort of pension or a 401k or something like that. And yeah, it's a very sad state that the economy is in, as a result of all of the money printing that happens. That's how it is.
Yeah,
with
we ended up in
COVID
this
on top of it.
Yeah, we ended up in this weird situation here. At this, it's kind of global, but for our direct experience in America, we've got this weird idea now where certain companies, when they reach a certain size, we can't let them fail. We've seen these the buyouts when the government considered companies too big to fail, which goes against everything that's capitalism, which is what we're supposed to be running on. If it's gonna fail because they made bad choices and now they're not solvent, well, then they're gonna fail, and someone will fill in the void that they left. So that's how we get all these zombie companies and all these companies like GM that had to take all of our money.
Yeah,
there's better
every
options.
single
The
airline.
airlines, airlines are just I don't know what they're doing behind closed doors there, but they're not running things the way they need to.
Well,
and
not
as much.
Like, when's the last time you said, "Oh, wow, that's a really cool innovation on an airline"? Like,
Never.
the planes are the exact same. They're actually slower than 30 years ago, right? Like, I'm kind of serious. Like, they're slower. 50 years ago, the Concorde existed, right? Like, where you can do transatlantic travel for 3 hours. You can't do it in less than 7 right now, right? Like, because everything is getting worse because they aren't very good companies. They don't know how to do things in a better way. You get, but when you like kind of deregulate and try new stuff, you get innovations like in Europe. Like, there are all these like discount airlines. You can fly from one place to another for like $30. That's a real innovation. I mean, we had a little bit of that with like Southwest and JetBlue, but the last time those two companies innovated was like 10, 15 years ago, right? Like they're kind of getting long in the tooth. You should have lots of new players coming online, like having new routes and trying different things, and maybe giving people a little more leg room and not being Nazis about masks, or like putting your seat back or putting your tray table up, or, stupid things like that. Like, you could have new business models, but it's been completely static for the last 30 years, in large part because, they keep getting bailed out. There are no new players coming in because there's no real opportunity to. I mean, you're competing against a beast that's government subsidized. How are
we've got all this old money and the government safe bet that's keeping. Really, it's disincentivizing innovation, and you can see it especially in America because everything's leaving our country in terms of innovative products or industrialization like that, because we're really being left as a service company or service country with no real jobs except service sectors.
Yeah, and that's part of what happens when you're the global reserve currency. So this is something that Richard Cantillon, who's an Irish-French economist from the 1700s, this is something that he observed when the British pound was the global reserve currency. Was, hey, like, the people closer to the money are getting all of the benefits, and also, like, the country that has the reserve currency, well, all of the manufacturing jobs are going to leave because labor is always going to be cheaper further away from money that you get. And that's exactly what we've seen in the US since about 1971, right? Like that was 50 years ago when the tie to gold was severed, and it wasn't all currencies around the world stopped being backed by gold, and instead the US dollar became the reserve currency, and we can print our way through pretty much anything. And that's resulted in pretty much every manufacturing job leaving. I mean, there's a little bit of an argument to be made about cars. A lot of that is manufactured down south right now. But other than that, like, pretty much all manufacturing has gone to much further places out from, basically Washington, D.C. and New York. They've gone to China and many other places. And even China is getting expensive. So it's like stuff that's very easy to set up elsewhere, like clothing manufacturing. It's moving to places like Vietnam, where it's even cheaper. And that's what happens because, money, like, the more third world a country is, the further away from the money it is, and the cheaper the labor is going to be. And the biggest part of manufacturing is going to be in large part labor. It's always human labor that produces everything anyway, in some way, shape, or form. So yeah, that's a sad situation we're in, but this is why I think Bitcoin is going to change a whole lot of things, and it's going to make for a much more just and fair world. And it really, I think, will be the salvation for a lot of different things.
All right, Jimmy. Well, that's been an awesome conversation. Hopefully that helps a lot of people understand crypto that might have been sitting on the edge, and Bitcoin especially. Where can everyone reach you and find out more things about Bitcoin?
Well, you can follow me on Twitter at Jimmy Song. I also send out a weekly newsletter on sort of the technical happenings and economic happenings around Bitcoin at jimmysong.substack.com. Newsletter comes out every Monday. I have a podcast, Bitcoin Fixes This, that you can listen to on your favorite podcasting platform. I also have published 3 books that you can find on programmingbitcoin.com. Programming Bitcoin is the first book that I wrote. The Little Bitcoin book and Thank God for Bitcoin are the other 2 books. You can find them all on Amazon and the website as well. I also teach programmers how to program Bitcoin. That's programming blockchain, which you can also find on my website, programmingbitcoin.com.
Well, awesome, man. We really appreciate you coming on the show. It's been a good time.
Thanks for having me. It was fun being here.
Woo! That was a pretty interesting episode, and I don't know, maybe I think that's going to be a little bit divisive.
Yeah, I had a couple things with him, especially with the end. I think he was talking about how all the other altcoins, how they weren't going to be decentralized, yet the same thing happened to Bitcoin. So it's like,
yeah, I mean, he's a hardcore Bitcoin dude, and he seems like he's thinking everything else is a shit coin. And you know what? I know, Grizz, you don't 100% agree with that, but I kind of do to a certain extent.
What's that? That everything else is a shitcoin?
Yeah, pretty much.
It's not that I disagree with that. I think some of them are still up and coming. Listen, if you want to make a shit ton of money on Doge, go for it. What do I care? But some are better than others, and some I have a lot of questions with. Actually, that infrastructure bill that we were looking at 2 weeks ago or whatever just added tax on all crypto. So
do you know what the tax rate was?
Like cash.
Oh,
so pretty much whatever he is thinking just kind of went down the tube.
Okay, so
if you're looking for it, it's on page 2345.
Thank you for sharing. Actually, you know what's a good idea is we should probably post a link to that on the website.
Who the fuck's gonna read it?
Listen, I think we read it.
I did not the whole thing.
We read enough of it. If you read the table of contents, that's all you need to know. And you can just pick through it there.
I found basically if I wanted to know if something was in there, I just did a search. Oh, boom! Oh, yeah, there's like crypto. Fuck.
PDF search.
Yeah, exactly.
Still, I totally disagree with your assessment. Our listeners are very diligent American citizens, and
I'm not saying that they're not.
They will read every page of this multi-thousand-page bill.
I'm trying to save them. Just tears.
No, fuck these guys. Make them read.
Thank you again for listening to Beautiful Bastards. Remember, like and subscribe. Let me give you a little bit of legal advice. Shut the fuck up.
Yeah, I don't know. See you next week or something.
Fantastic.